Hello dear friends, I am Ram. Welcome to FinShoppy. I am a CFA charter holder. So today in this video I am going to discuss about 5 best investment options for the taxation purpose. As you know that we have 1,50,000 allowable tax benefit available under section 80C, where you can actually use some expenses or some investments to make up that. You need not pay any tax on that 1,50,000 if you can utilize these options. You may have some eligible expenses like kids education expenses to fill that 1,50,000, but that may not fill entire 1,50,000. So you have to utilize some investment options to fill those gaps. I am going to discuss about 8 investment options. From that, 3 investment options are not that good and 5 investment options which are very good for you to consider. So at the end of this session, I am going to show you if you are going to invest in all these 8 investment options, how much return you are going to get over a period of time, so that you can able to understand which investment option is suitable for you based on your risk profile and based on your investment horizon, etc. First, let us going to discuss 3 investment options which are not that good. First investment option is 5-year fixed deposits, where you can invest fixed deposits for the lock-in of 5 years. You will get return around 6.5 to 7% rate of interest based on the current interest rates for the next 5 years. But downside in this investment option is interest earned during this period would be taxable. Second investment option in the first 3 would be traditional insurance policies like endowment policies, whole life policies or money back policies, where you get around 4 to 7% rate of return. Lock-in periods for these investments would be around 10, 15, 20 years of the maturity periods. So you cannot take back your money during these lock-in periods. Third investment option is unit linked insurance plan, where you will get return around 10 to 12% rate of return over a very long period. Okay, lock-in period would be 5 years. If you think investment in the lock-in period, it would be very low because of high expense ratio of these policies, which may be policy allocation expenses, administrative expenses, and management expenses, fund management expenses, etc. I wanted to give couple of examples for the ULIPs from my clients, so that you will understand what could be the returns during the first 5 years or so. So one of my client invested way back when he visited a bank. He got trapped and he started investment 1 lakh every year. So he invested 5 years. When we check recently, what would be the investment worth. Now investment worth would be 5,88,000. When I calculate CAGR return on that investment, it comes around 5.5%. It is very pathetic return. When we check last 5 years returns of the market, which is also market linked product, had he invested this investment in any market linked product like mutual funds, you might got around 12 to 15% kind of return. Other example is again from my clients. He also invested in one of the ULIPs from the last 3 years. So when we check current value of that investment, he invested 1 lakh every year. When we check current value of that investment, it came around 3,03,000. It's almost no return at all. Okay, reason behind very low return during the first 5 years of the ULIPs is, one is insurance component. Total investment is not going to invest in the market linked investments. Some portion have to allocate for the insurance, and other one is the expense ratio. They have very high expense ratio compared to the mutual funds during the first 5 years. When we discuss about insurance product, we should consider insurance component. So I would suggest that if you need insurance, rather going for these traditional insurance or ULIPs, you would better to take a term insurance. Okay, that is the pure form of insurance that give you very good coverage for the very lowest amount, and the remaining amount, whatever you are thinking about investment portion, you would better to invest in the other investment options where you will get the good amount of return. So I consider first three investment options whatever we discussed just now are not that good investment options for the taxation purpose. Now let us discuss about other 5 investment options which can be considered as the best investment options. First one from that is PPF, which gives 8% rate of return based on the current interest rate structure. So it is also subject to change by the government, but when you consider after tax returns, you will get around more than 10% rate of return on this product because it is triple E product. So on your contributions, on your earnings, on your withdrawals, all the 3 cases it would be tax free. Other one within the provident fund is employee provident fund. Those who work, they have to pay 12% from their basic to the provident fund as an investment. So they can also actually increase this limit. So that is called voluntary provident fund. That is also allowable under section 80C. Third investment options under the best investment options is SUKANYA SAMRIDDHI YOJANA. You can use it for your daughters. Investment horizon would be 14 years and later on we have to wait for maturity till 21 years. So in that current rate of return is 8.1%. So this is also fall under triple E category. It means your withdrawal amount also would be tax free. So effective rate of return would be work out more than 10% in this option also. Fourth investment option is NPS, National Pension Scheme, where you get returns around 10 to 12% kind of returns. So this is a purely retirement product. If you are thinking about retirement pension, this is one of the best product available. You will get additional tax benefit of 50,000 in addition to the 1,50,000 which is available under section 80C for NPS specially. As it is a retirement investment option, NPS will mature at the age of 60 years. Also, investments which we make into NPS would be distributed among different asset classes like government bonds, corporate bonds and equity. So investment returns would be a bit volatile under NPS scheme. Fifth investment option would be equity linked savings schemes, which would give returns around 14 to 16%. As this is a market linked product, returns would be volatile. But over a long period of time, if you can take market volatility risk, you would get better returns than any other product which we have discussed just now. Now let us look at a comparative analysis of all these investment options which we just discussed so that you will understand how much return you are going to get over a period of time, so that decision of investment would be easier for you. So look at the table. If we invest 50,000 rupees each year in all these investment options, so what would be the returns after 20 years in each of these investment options? For traditional insurance option, you are going to get around 18 lakhs. It would be tax free after maturity. For 5 years FD, you are going to get 20 lakhs, but it would be taxable. So investment return, it would be actual investment return would be less than this 20 lakhs. PPF, EPF and even SUKANYA SAMRIDDHI YOJANA, you are going to get around 23 lakhs. All these 3 products would be tax free while withdrawal. NPS, you are going to get around 32 lakhs. Partially it is taxable and partially it is tax free. ULIPs, you are going to get around 29 lakhs. It is also tax free. For ELSS, you are going to get around 51 lakhs. Even if you reduce tax component, which is there 10% on the capital gain on ELSS, it would be around 45 or 46 lakhs after the tax also. So it is far better product than ULIPs when you compare, because these two are market linked products. NPS is partially market linked product. There is no comparable product for these. That's it friends about 8 investment options. From that I consider 3 investment options are not so good and 5 investment options would be better investment options for you to consider tax benefit point of view. It is also based on your investment horizon and your risk profile and your financial goals. So hope you like it. Thank you so much for watching. Please do share this video for your friends, and if you haven't subscribed to my YouTube channel, please do it. Thank you so much.